Welcome back to Investing Talk Podcast. Today we're going to tackle a question many of you have asked, one that lands right in our inbox pretty regularly. Is Jabil a good time to buy now? We've gathered, a stack of the latest reports, analyst notes, financial data on Jabil, and we're ready to lay out all the insights for you. Our mission, as always, is to help you understand the full picture, right? Giving you the clarity to decide what truly stands out for your unique investment goals. Before we jump into the specifics, if you find these discussions helpful, please take a moment to subscribe, like, and maybe leave us a comment. Your support really does help us keep bringing these insights to life. And hey, if you're feeling generous, maybe consider buying us a coffee. It definitely fuels these research sessions. Plus, if there's a specific company you'd like us to look into next, just let us know in the comments below. Okay, with that out of the way, let's unpack Jabil and see what the market signals are, whispering. So to kick things off, let's get a handle on who Jabil is. What exactly makes their business engine hum?
What's the foundational story here, especially when we look at their most recent performance?
Right. Well, what's pretty fascinating about Jabil is their position in the electronic manufacturing services sector, EMS,
EMS, right. Like they build stuff for other tech companies.
Exactly. Think of them as the kind of the silent builders behind a lot of the tech products and infrastructure you use every day. They're particularly strong in areas like cloud infrastructure, cutting-edge AI hardware, and also capital equipment for various industries. Their third quarter FY 2025 revenue, it came in pretty robustly, landed between $7.1 and $7.8 billion.
Okay, that's a decent number.
Yeah, but what's really caught our attention, I think, are their projections for Q4 2025. They're guiding for GAAP diluted EPS, that's the standard earnings measure, to be between $1.79 and $2.37. But maybe more importantly for investors, their non-GAAP core EPS guidance.
The core number, usually cleaner.
Exactly. It often gives a clear picture of underlying operational profitability that's projected even stronger at $2.64 to $3.04. And the management team, they're explicitly stating they expect to deliver, quote, record core earnings per share.
Record core earnings per share. Okay, that's definitely a headline grabber, especially, in today's market. But what's truly driving that kind of growth? And how does their overall financial health look when we dig a little deeper? Are they stretching themselves thin to achieve this, or is it, genuinely robust?
That's a really crucial question. The primary growth engine, without much doubt, is their intelligent infrastructure segment.
Okay.
This is where they're benefiting enormously from the just insatiable demand for AI and data center buildouts.
Right, that AI wave we keep hearing about.
Absolutely. And even though they've seen some softness in other areas like EVs and renewables, which are kind of experiencing their own market cycles right now, the AI wave is proving powerful enough to really push the entire company forward. Now, in terms of financial health, it's not just growth for growth's sake, which is important. The company seems laser focused on enhancing margins, across their operations, optimizing cash flow, and returning value to shareholders.
Okay, so discipline there too.
Yeah, their Q3 2025 SEC filings, they paint a picture of pretty stable debt management and robust operational cash flows, which basically means they're generating plenty of cash from their core business. They're actively engaged in share repurchases too, which usually indicates management confidence in their own valuation.
You'd say.
And they're making these targeted investments specifically in those higher margin, high growth opportunities we talked about. All of this, it signals ongoing, disciplined financial strength, not just, chasing fleeting trends.
So they're not just riding the AI wave, they're actively shaping their business to capitalize on it with financial discipline to boot. That sounds solid. But in such a competitive space, what truly gives Jabil their edge? What makes them stand out from other EMS providers? And how sustainable is that advantage?
Well, that's where their diversified portfolio comes into play. It offers a level of resilience, that maybe many smaller, more specialized players might lack.
Okay, diversification helps.
Yeah, they're not putting all their eggs in one basket, which helps smooth out the cyclicality that's just inherent in the tech sector. But maybe more strategically, their recent really significant investments in dedicated AI and cloud capabilities, those are truly reinforcing their competitive advantages.
So they're investing heavily there.
Very heavily. We're not just talking incremental improvements. We're talking substantial capital allocation and building expertise. It's kind of like a tech giant building its own custom data centers. But Jabil is doing that for many clients. And this raises an important question maybe for you, the listener. How much weight do you put on a company's proven ability to not only pivot into these new high-growth areas like AI, but also to really strengthen its position through focused large-scale investments? It speaks volumes about their long-term vision, I think.
That gives us a really solid sense of Jabil's business and its strategic direction.
Yeah.
But when we switch gears from understanding the business to asking, is it a good time to buy now? Valuation is, well, it's absolutely key. How does Jabil look compared to its peers in terms of, what you'd actually pay for a piece of this company?
Right, that's where the rubber meets the road, isn't it? If we connect this to the bigger picture of valuation, Jabil's ratios are, well, they're quite interesting, potentially insightful. Their price-to-earnings ratio, the PE, it's sitting around 14.9 right now.
Okay, 14.9 context.
Yeah, so that number is based on a recent price of about $208.49, and their expected FY 2025 EPS of roughly $14. Now, if you're thinking, is that good or bad? We always need to compare it to its industry peers, right?
Sure.
The electronic manufacturing services sector typically sees PE ratios closer to, say, 16 to 22.
So Jabil's lower.
Exactly. It's trading at a bit of a discount. Kind of like finding a high-quality product for less than the usual market price, maybe suggesting the market isn't fully appreciating its potential yet.
Especially given that strong EPS guidance.
Precisely. And similarly, their price-to-sales ratio, PS, is about 0.28, while the industry average is more like 0.3 to 0.5. And their price-to-book, PB, is around 3.8 versus an average of maybe 4.5 to 5.2 for the sector.
Okay, so you're saying that across these key valuation metrics, PE, PS, PB, Jabil, seems to be trading at a, let's say, modest discount compared to its industry. That sounds like potentially an intriguing opportunity. Does this hold up if we look at, discounted cash flow models?
It generally does. These ratios consistently indicate Jabil is slightly undervalued relative to its direct competitors. And when we run discounted cash flow or DCF models, which try to estimate fair value based on future cash flows,
Right.
they generally imply a fair value that's pretty near the current market price. But here's where the potential upside comes in. That fair value could significantly increase if Jabil achieves that sustained margin expansion we talked about.
Oh, the AI stuff.
Exactly, particularly from those big AI and infrastructure investments. So it's this interesting dance between current price and future potential, all really contingent on their strategic execution.
Okay, this is where it gets really interesting for folks who are, closely watching the charts, maybe looking for entry points. What does the technical analysis tell us? How has the stock actually been moving recently? Any signals there?
Yeah, looking at the price action, since about July 2025, Jabil has been trading within a fairly defined range, mostly between $195 and $230.
Okay, a channel.
Pretty much. We've seen resistance, meaning it struggles to break higher, near that $225 mark, and it's found consistent support down around $200. The prevailing price action, it really shows a period of consolidation after those strong Q3 results came out.
So digesting the news.
Yeah, exactly. The stock isn't making big moves either way, just kind of settling. If we dig into the technical indicators, the 50-day moving average is hovering around $212, while the longer-term 200-day is nearer $196. The RSI, the Relative Strength Index, which helps gauge if it's overbought or oversold, it's sitting comfortably neutral, right around 51. And the MCD, that momentum indicator, it looks pretty flat. Tells us there isn't a strong directional push right now.
So overall?
Overall, the trend is kind of sideways, maybe with a mild upward bias. It suggests a range-bound short-term period, which, could be attractive to different types of investors, maybe those looking to buy on dips near that $200 support.
Or maybe long-term folks seeing it as coiling for a move.
Potentially, yeah. It depends on your time frame and strategy.
Okay, beyond the raw numbers and charts, what's been buzzing around Jabil recently? News, sentiment. This stuff can often give us a critical sense of momentum or maybe hidden headwinds. What's the word on the street?
Well, there's definitely been some strong positive news flowing in recently. Jabil actually raised its full-year FY 2025 guidance after that robust Q3.
Raised guidance, okay.
Yeah, and again, emphatically citing AI infrastructure as a key growth driver. This isn't just a one-off mention. It's central to their story now. For instance, back in June 2025, they announced a really significant $500 million multi-year investment in cloud and AI right here in U.S. manufacturing.
$500 million, wow. That's serious.
It is. It's a physical expansion, a concrete step towards capturing more of that high-marginal business, not just talk. And then in July, they announced a collaboration with Endeavor for, get this, gigawatt-scale AI infrastructure.
Gigawatt scale, that sounds Huge.
It is huge. It suggests a really serious, massive commitment to building out the kind of the physical backbone of the AI revolution. These announcements are like flashing neon signs pointing to their strategic direction.
That sounds like a clear, powerful commitment to AI, and those collaborations are certainly impressive. So what are the seasoned analysts on Wall Street saying about all this? Are they as excited as this news makes it sound?
Generally speaking, yeah, the analyst community is quite bullish on Jabil. The vast majority rate Jabil as either buy or overweight.
Okay, mostly positive then.
Very positive. And when you dig into their reports, they consistently cite two main reasons for their optimism. One is Jabil's attractive valuation, especially like we discussed, compared to its peers.
Right, get the discount.
And the second is its strong and growing exposure to AI. It's not seen as just a passing interest. Analysts view it as pretty foundational for the company going forward. Now, this raises another important point for you listening. How much weight do you personally place on analyst consensus?
Right, is it a deciding factor or just one input?
Exactly, something to consider for your own process.
And what about insider activity and maybe the broader market sentiment from like retail investors or social media? Any red flags there, like key execs quietly heading for the exits? Or is the market getting maybe overly exuberant, creating a bit of a bubble?
That's a vital check, always. You want to see if the insiders are voting with their wallets, so to speak. In Jabil's case, the insider activity shows some routine sales. For instance, an individual named Frederick McCoy III sold some shares in July 2025.
Okay, some selling. Is it concerning?
Well, here's the key. These sales represent really negligible fractions of the company's total shares outstanding, like tiny percentages. They align much more with typical profit-taking or maybe diversified portfolio management rather than indicating any broad concerning exodus.
So normal course of business kind of sales.
Looks like it. Multiple Form 4 filings, those are the disclosures for insider transactions, they indicate these are pretty standard, often pre-planned sales, not some mass flight for the doors. And on the broader sentiment front, looking at social media, retail investor forums, it generally reflects a kind of cautious optimism.
Cautious optimism. So positive but not crazy.
Exactly. It's positive but not euphoric. There's no sense that the market is getting carried away or overly hyped up, which, can actually be a good sign for stability. It suggests there might still be room for appreciation without the immediate risk of a speculative bubble bursting.
Okay, looking forward then. What are the key events or developments that could really, move the needle for Jabil, both in the short term, maybe for traders playing earnings, and for the longer-term investors? And crucially, what should we, as savvy investors, be aware of in terms of potential risks? Because every investment has them.
Absolutely. For the short term, the absolute biggest catalyst coming up is going to be their Q4 2025 results. Those are expected in October.
October, okay.
Yeah, and with management already guiding for that record core EPS, any beat or even just a strong meet of those expectations will likely be met with a positive market reaction. Additionally, any further progress or commercialization news around their AI-related investments.
Like new deals.
Exactly. New high-profile collaborations, maybe operational milestones from that big $500 million investment. Anything like that will be closely watched and could provide immediate boost to the stock.
But for those looking further out, thinking beyond just the next quarter, what's the longer-term story here that could drive value?
Well, for the long-term picture, that $500 million cloud and AI expansion is really the cornerstone. It's designed to deliver sustained, higher margin growth over several years. It could fundamentally shift their revenue mix towards more profitable areas.
So a multi-year growth driver?
Potentially, yes.
Yeah.
Further strategic collaborations and continued expansion in the cloud and hyperscale markets will be really significant indicators of their ongoing success there. Think of it as Jabil continuing to build out the, digital highways and cities of the future. And also, we probably shouldn't forget about a potential macroeconomic recovery in sectors like EVs or renewables.
Oh, right, those softer areas.
Yeah. While they've seen softness there recently, Jabil has established strong positions in those markets. If or when those sectors turn around, it could reignite those segments, adding another layer of diversified growth.
Okay, so on the flip side of all that potential upside, what are the main risks? What could derail this promising outlook for Jabil or the broader EMS sector?
Right. Risks are always part of the equation. Jabil itself is actually quite transparent about its risks in its filings. They cite challenges in supply chain management, which is always a factor in manufacturing.
Sure.
Customer concentration, meaning a potential reliance on a few very large clients. If one leaves, it hurts.
Concentration risk.
Exposure to cyclical end markets, we talked about that.
Yeah.
And the ever-present execution risk around new large investments. For example, if their new AI facilities don't come online as efficiently or profitably as they planned, that could certainly impact the future outlook.
Makes sense.
Also, margin compression in their non-AI segments could threaten overall profitability if it's not fully offset by that higher margin growth elsewhere. And then on a broader level, the entire EMS sector is just inherently cyclical. It makes it vulnerable to global demand swings, geopolitical disruptions that mess with manufacturing or supply chains.
Yeah, lots of macro factors.
And just rapid technology shifts that could quickly make certain capabilities obsolete. And even with AI demand being incredibly strong right now, eventually it might normalize. Or competition in the AI infrastructure space could get much more intense.
True. Success breeds competition.
Exactly. So these are all important factors to keep in mind when you're evaluating the overall opportunity against the potential downside. It's never a sure thing.
We've covered just a tremendous amount of ground today, really peeling back the layers on Jabil. So to bring it all together for our listener, what's the overall investment thesis for Jabil right now, distilled down to its essence?
Yeah, when we pull it all together, Jabil consistently demonstrates, I think, solid financial health. Its valuation metrics appear modestly below its peers, as we discussed, and it has clear, significant catalysts driven by that explosion in the AI and cloud sectors. So from all our sources, the overall sentiment, if you had to put a number on it, translates to maybe a strong 7.5 out of 10.
Okay, 7.5 out of 10. And what's the core rationale behind that specific rating? What makes it such a compelling, though not perfect, story?
Well, the short-term trading narrative looks pretty robustly supported by their strong guidance and that upcoming Q4 earnings report where record core EPS is the expectation.
Right, the near-term catalyst.
Exactly. And then for long-term investors, the growth potential seems genuinely exciting, really underpinned by that strategic margin expansion potential and those substantial targeted investments in AI infrastructure. While the risks, both internal and external, are definitely there and well articulated, they appear manageable, at least for now, by a company that seems diversified and disciplined. Though you can't entirely ignore the inherent cyclicality of the broader EMS sector as a sort of lingering concern.
So what does this all mean for someone considering their investment horizon? Is this primarily a short-term play, maybe a long-term hold, or something in between?
It strikes me as remarkably balanced right now. It appears potentially attractive for both short-term trading opportunities.
Around earnings or technical level?
No, exactly. Especially around those Q4 earnings and maybe the current technical support levels near $200. But it also looks attractive for long-term investment. And that long-term appeal really comes from the substantial, multi-year AI and cloud-driven margin growth potential we've been discussing. So for you, the listener, it really raises an important question to ponder. Given everything we've analyzed today, how do you personally weigh the allure of those short-term catalysts against the powerful undertow of that potential long-term growth story? Where does your focus lie?
What an incredible exploration of Jabil. Wow. There's really so much to consider, isn't there? From the just transformative power of AI driving that strategic growth to the careful management of financial health in what's clearly a very dynamic industry. It really highlights how a company can, position itself right at the heart of the next big technological leap. Really fascinating stuff. Thank you so much for joining us on Investing Talk Podcast today. We truly hope this discussion provides you with valuable, maybe actionable insights as you navigate your own investment journey. Until next time, keep learning, keep asking those incisive questions, and most importantly, keep making informed, confident decisions.